Currently at this point, I only own one commercial building, planning on buying another strip center this year. And I've stayed out of the single family home space just because I am lazy. But that's where you are able to really get in and save taxes, is focusing on bonus depreciation and just regular straight line depreciation with your fixed assets.
So when you go to exit, Mason, like what are you doing with the capital gains tax? Part of what we're doing here is try to figure out, like, create more wealth, not only on the cash flow or the appreciation, but on the tax flow, the outer edges of before and after you moving the capital. So what's been like your main strategy for your taxes as you're exiting these assets?
So the beautiful thing about land, and whenever you're just doing these land flips, is you do not have to pay capital gains taxes on it. What you're considered is a dealer, so it's considered inventory, where every land deal that I do, we basically create a miniature P&L or profit and loss statement of, this is the wholesale price that we bought this product for, and this is the sale price that we sold it for. So my CPA does a great job minimizing taxes of having our entity set up as an S corp, so we do all the pass-through stuff. However, with that being said, regardless if you're paying capital gains taxes or not, if you're doing deals like what I'm talking about, where you're getting a 50% cash on cash return or a 500% cash on cash return, you're making a ton of money. And that's where you have to invest that money into other stuff. So currently at this point, I only own one commercial building, planning on buying another strip center this year. And I've stayed out of the single family home space just because I am lazy. But that's where you are able to really get in and save taxes, is focusing on bonus depreciation and just regular straight line depreciation with your fixed assets. My CPA told me to buy a truck last year, which was a fun purchase for me, just getting to buy a truck and fully depreciate it. So that's kind of the idea behind it. But in terms of real estate investing, not having to pay capital gains taxes on these huge profit deals is really nice.
Absolutely. Yeah, those are some great ideas. And talking with Mason McDonald, coachingwithmason.com, coachingwithmason.com. And right, so if you're a dealer, so you're doing a certain amount per year, so you're able to run it through the S corp, and by running through the S corp, you can continue to invest the funds and just take like a salary from the S corp is the main idea, Mason, and not have to realize it all in 1 year and pay the tax. Is that a fair summary on that S corp strategy?
Yep, exactly. And my strategy with all this is hire a CPA that's better and smarter and spends all day and all night doing this kind of stuff, because I don't fully understand the laws and everything around it, which is why I don't try to ever give any tax advice. But being able to structure it like that, pay myself a fair and reasonable salary, and keep the profits and do disbursements whenever my CPA tells me to, makes it super, super simple.
Yep, absolutely. That's a cool way to do it. And there's also an alternative way too, which I'll throw out there for anyone's listening. In fact, we did $45 million worth of land, more like assignment sales, where they had it for less than a year. Actually, they didn't even have it. They just tied it up and then they just like a double close. And so on those exits, we used what's called a deferred sales trust, where they moved the proceeds into the trust, deferred all of the ordinary income tax. There was no capital gains tax because it was less than a year. And what's neat about that is now they can turn around, and they had a promissory note from the trust, but they can turn around and those funds can go in and out of different deals with new LLCs, establishing a new basis and a new opportunity for growth. And so, yeah, I want to compare and contrast the notes there. I think at a certain point, if the dollar amount's so big, you have to take what's called fair and reasonable from S corps, which basically means like a certain percentage of that. So I also have an S corp that I run for my capital gains tax solutions business, and so so I think it does definitely work for certain income levels. But if you start to get really high, a fair and reasonable has to be higher, and so that perhaps is when this would come into play. If you want to learn more about that, anybody, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com, where you can learn more about that.